This is the type of loan that some of our most savvy real estate agents and investors are using to buy multiple properties. I'm Joanthan Rouse, your local Boise mortgage broker, and on this video I'm going to show you how a Dscr loan works. This way you know how to use it to structure a deal, whether you're a beginner or the most seasoned investor. If you're interested in learning how to work with investors who buy multiple properties each year, then a debt service coverage ratio loan is a tool that you're going to want to learn much more about. You see, the problem that most real estate investors have getting traditional financing for their investments is they're limited to the amount of properties that they're able to hold. Some issues that I have seen personally are investors are self-employed and sometimes they don't report enough income to qualify. And sometimes there are strict credit and rental requirements. And lastly, most banks will require personal tax returns and pay stubs to show income. This is where a Dscr loan comes to play, and it might just help save your situation. Dscr stands for Debt Service Coverage Ratio. But unlike traditional loans, Dscr loans are built for real estate investors. The main difference is that to get this loan approved, the asset or property needs to be approved, not the borrower. This means that the underwriter is going to look at the after repair value or the cash flow of the property. These loans are most ideal for investors who are looking to expand their portfolio. These loans help you leverage financing to purchase additional investment properties over using all your funds to purchase just one property. So the question I get asked is, how do people qualify? The only thing you need to qualify is to have a credit score over 640 and to have a property that qualifies. During the underwriting process, if the property is already or is projected to create 1.25% to 1.5% in rental income over the mortgage balance, including principal, interest, taxes, and insurance, the property might qualify for a loan. For example, if you buy a $200,000 property, the appraiser will need to report the rental income somewhere around $1,680. As long as the property can generate $1,680 or north a month, the property will qualify. With the market shifting, it's important to familiarize yourself with additional loan products like this one that can either help you or your buyers. Specializing in these types of loans can allow you to work with additional investors or buyers who do multiple transactions a year versus one client who purchases a house every 4 to 7 years. But you need to know the parameters. Dscr loans can be used either short-term or long-term based on what you decide to do with the property. Whether you're flipping properties, acquiring properties to be converted to long-term rentals or maybe Airbnbs, holding cash-flowing properties long-term, and my personal favorite, purchasing non-warrantable condos. So if you have a property that you want to get a quote on, I'd love to show you how this product works. Follow the instructions next to this video and let's get all your questions answered. There's no commitment, and to get started, we just need to know the property's current cash flow, the projected value, property taxes and homeowners insurance, and an HOA if there is one. I'll put together several scenarios for either you or your clients to review and compare. If you like what you're hearing in this video, make sure to subscribe to my local YouTube channel for tips and tricks on lending right here in Boise, Idaho. I'm Joanthan Rouse, and we'll see you on the next video.